We're looking at various strike prices for April 640 put that we see that was marked down here on Google. So it is one of the sides that we're going to look at because Google reports earnings April 19th, 2012. Now, of course, these options are going to change significantly, and I mean significantly. So basically, when I'm looking at this 640 put, for that time frame, I'm going to put this in here, MMT, and there it is. That's below the market to address below the risk. So if I go down here for an April, let's say $610 put below the market, I'm going to put that in there, and I'm also going to show behind here that this is an April 640 put. I'm going to show in the chart structure how deflated that the price is. And basically they're relatively cheap compared to where they were at $35. They're taking $15 premium. It's part of the trade management to look at all sides and be prepared. Here is also a $600 put way below the market that was up here. In this video, they were up here above $20. They've taken $14 out of them. We'll look for these to go within the risk parameter. We'll monitor these strike prices that we have. We have some weeklies already involved. The monthly ones are for April. We'll be taking a look at the 630 put here, how cheap it is behind the screen. This is the daily chart. You can see 630 put. It's down here. It's cheap, but we have to monitor that side of the market so that we're well addressing that overnight risk premium relative to both the up and out of the money call and below the market put, as they both have to be wholesale to the entries, MMTs. So they're going to change rapidly now, and we're looking at the April one. Another one that I'm going to look at is this $700 call. Now, one thing I've noticed about the calls, MMTs, is that they're all fairly inflated up here, meaning, yeah, they were wholesale back over here at much lower price levels, you know, around the $2 level. Right now, these things are up here at $6. They were buyable down here at $1.50. So the risk is high on the call side at the moment. They need to come down in price. And that's a $700 call. But when we look at a $660 call, they too were a very good buy down around $4, but they're inflated. They can go higher, but there's a higher risk. So we would need Google to pull back to take the call side down, which would take the other side of the market up. So if the calls are expensive and overvalued up here, then that means that the 645 put for April is very cheap. So if that goes up in value, of course, this call option that I'm looking at, that's right here in the same video. You can see the two. Let's move this one over. That's the 645 put, and this is the 660 call. And the problem with the scene here is you can see that this is an inflated price area. This is an inflated price area. When these come down in value, these are going to go up in value between now and April 19th. There's going to be an adjustment in all of these contracts that I'm bringing very clear. One of the things we're going to look at is this is a representation of a deflated price, and they can get a little bit more deflated. It's when they're down here at the bottom is when you're buying those just in case there's a big drop in the market or a big drop in Google unexpectedly, some kind of headline comes out. These are relatively cheap down here for the lower end of the market. For the month of April, it's a monthly expiration. Yes, it would have been very expensive for you to have puts on Apple when they were up here at 20, but they've taken almost $14 premium. So we're going to be looking at what price levels based on Google. So if Google has a run higher, they're going to bring these down a little bit lower in price level. But then again, we will look at getting below the market at the cheapest level to protect our overnight risk. And that's using a $600 put based on an earning season. We'll also even be looking at below the market 590 put, way out of the money. They're still a little bit expensive at $4.92. However, if they get the price down around $2, well, then it's very cheap, and you can put the risk on and have the upside and out of the money calls working that we talked about. So this is a little bit of the strategies that we're going to be working with going into the earnings. In the short term, we're going to be looking at the 645 put. It's a weekly. We'll be, there's only two last week. They open on Thursday, so you don't have much price range. But once again, that's how I steal that. We'll be looking at that 645 put. We'll be looking at various put structures here of wholesale prices 650. We'll be looking at the 660. On the other hand, they only have 2 weeks of data. There's special pricing controls that go into these. That's in the money. So they would take these way down if Google breaks higher, of course. But nonetheless, we're going to take a look at what the 660 call looks like. We would love to be able to steal this wholesale. The low was $1.52 and the previous high was $3.83. So if I can steal these down here, MMTs, for about 60 pennies on 50 contracts, I don't have that much risk for that up and out of the money weekly 660 call. That's depending on what Google does. But we know that the stock Google on a daily chart has had a reversal. We'll be looking at the 650 weekly. That's April. Not April, I mean March. We already did the Aprils, but the weekly short-term intraday entries and exit at wholesale prices. So if you buy down here at 350 and you're selling in up here at the highs, you're doing quite well. So the call side does work. Another one we'll monitor is a 640 call. And this was down here at 840. The highs were 1370. Once again, it's about buying down here at that wholesale level. So moving forward, we're going to be monitoring the weekly that expires this next coming Friday. Tomorrow's Monday, and we're going to trade these during the week. So basically, I can show you here the 645 put. We're going to watch it on the monthly level because it's cheap. It's deflated versus the call side. Now, Google on the daily chart, you can clearly see here when I pull it up and wait for it to adjust itself, that you're going to be able to see here where the prices were. I'll be featuring the MMT platform and where we're at up here and how we filled this diamond gap across here. That 652 level that I talked about last week was going to be a major hurdle of resistance. However, ever since we've been buying down here at that 600 level, after it put in that low that we featured this low, and it was time to buy that bottom, we've gone straight up and filled in this gap area at this teeny line at that diamond right here. And that was on 1/6 of 2012, by the way. So basically, we're right here in this major half bar on a daily. As far as our support levels that we're going to look at is this big daily half down bar. That's ultimately going to be in the price range of around, let's see, 634.12 will be our support level. Over here, when we start looking at the 632 level, below the market, we're going to just take this part of the trend right here, and this is the breakout where we were buying long. Now we've come all the way back up here, so we're going to have other support levels. Here's 629.26. Here's another one in the shorter term, 639.95, and this little guy right here is 631.67. You can notice how the wicks have bounced to the tops. And each support level has been greatly supported with great breakouts and higher highs all the way back up to this level. Now remember, when Google reported earnings last quarter, that was that big gap down. That's this bar. It's a very important bar. This bar right here, this half daily bar is $636.23. That's going to be that drop down support level. no matter what in the shorter term. Now, granted that we are above where the earnings were back on 1/19 of 2012, and they report April 19th. 90 days later, we've come back up and we've filled in this area right back over here where the highs were up here. This is the earnings gap down. Look at that. Big gap down. Big shakeout when we were buyers all the way up. And look at this last fade back to 592. Now, any pullback at all or any break of support level will get the short side down here to support level. When it gets to support level, then we'll buy the calls and take it right back up and take a look at up and out of the money. So there's a long trade at support levels, and if we want to keep moving and going all the way up here, and it wouldn't be out of the abnormal to come right back up here to 660 area, we shorted this stock at $670 because that was our first trend that we had did. I just want people to see this top right up here, which was 670.25, and we were short at 670 all the way down. We traded that all the way up, got out of the earnings season. That was this time frame right here. That was on 1/4 of 2012. Now, when I take in our Zoom tool and I just take this piece of the trend, that's all I need right here, is I can see clearly in the platform that diamond resistance level. And I can see clearly where my support levels, I can see how they've been bouncing off of support ever since we broke above this downtrend level right here. We've been going straight up 1 day, 2 days, 3 days, 4th day, but the 5th day they pulled it back to that diamond support level on Google. It's a special trade between 3/26, 2012 March Madness ending up into the actual earning reporting session April 19th of 2012. We'll have special alerts on it. We'll have updates on it. We'll have everything that it takes for people to come out a big winner, and that's the MMT daily Google chart. And one of the things we'll be taking a look at right here, we're going to be taking a look at these diamond areas of support. That 632 is a great one. That's where you went up 1, 2, 3, 4, 5, $8.90 is a half delta. So let's establish that each one of these lines tomorrow, each one of these daily lines that you see here are $8.90 in our system. And it is 100% right there at those lines. Look at the bounces. Look at the bounces at our price teeny lines that we have in here. Look at it on a daily level. They are accurate. So basically, it had a daily reversal on Friday. This is going to be our support level. Like I said, 639, that's that bar. The current bar right here is also key right here. This is going to be that bar, this daily bar. This one, 639.90 right here. And when we hit that support level, we're going to see if we break these higher highs. And if we get below that level, then we'll short it down here to that support level. And we'll be trading both the call and the put side of the market, as we will. All right, MMTs, and the special Google alert service on this name is we're going to be watching where that reversal is for the short to support. Once it hits support, it bounces like a jet now, and it has for 5 days. Here was that first breakout day, the second, the third, the fourth, and we finally got up here to the 5th day reversal, and we're going to come down and test support levels. That's the daily MMT application. And based on the 650 put for the 330 weekly and the 330 weekly 640 call. Now, we're going to be checking out various calls and the puts. We'll be also looking at this weekly market. I just want you to know that if this thing drops down to the 630 call, that means they're going to take a lot of premium, and that range is 538. If they drop these down to around $8.50 and take all of that overside market out, they close at 1870. Friday's high was 1990. That's a 630 call. If we drop down and hit that 630 support area, they take all the premium out of that weekly. We're going to be watching this very, very closely. The 635 call. that was marked down $3.60 with a 1580 high and a 498 range and a 1082 low. We're going to be watching these weeklies based on Google closing price of 642.50. That's the analysis for the weekly. However, we are covering the complete trade between now and April 19th using various different strike prices. We have them all here. Here's put, $600 put, a 625 put, a 630 put below the market, and a 635, a 640. But we got the 645. They're all in April. But we're looking at that 670 call, that 675 call, and I'm even going to throw in the 650 call. Now, I went over the call charts. They're all inflated. They got to come down in price because the risk is still high. They could be traded on the intraday level, but the risk is high to hold overnight in any of the calls. The puts, on the other hand, are the most deflated price area that I clearly showed in this charts that I showed in the video. So basically, once again, when I'm looking at various different prices that we like the 670 April call, but look at it on a weekly level. It got up here to $14. On a weekly level, this thing here was down, so they're inflated. We got to buy them on the pullback. That's what it looks like, that 670 April call. That's for an earnings. But these, we'd like to get these around $2.50 between now and April 19th. On Google, call and put strike prices. Google weekly trades going into the complete calendar yearly earnings April 19, 2012.